In 2025 has been a very large year for crypto thefts, and they happen in many different ways. It could be a Ponzi scam that you're falling part of, or a pig butchering scheme, or maybe you had a home invasion and someone at gunpoint has forced you to turn over your cryptocurrencies. All of these are sad. It's time for many crypto owners to be circumspect, and maybe it's time to start to become anonymous and not tell people that you own cryptocurrencies, because it can be very easy in a home invasion with a gun to your head to turn over your PIN, your passwords, your secret phrases, and have everything stolen from you. We know this happened to the CEO of Ledger himself, right? Because he publicized where his house was. So we have this story of a man who had $8 million of crypto taken from him. As a part of that, they discovered that he had some more crypto somewhere else, and they forced him to drive to a location 3 hours away where he had a hard drive with a wallet on it, and he lost those there as well. So a few hours separation is not adequate enough. It has to be someplace where it's going to require a plane trip to get to, because it's going to be very tough to kidnap someone to do a plane trip. You need to really think about isolating your keys and your passwords and start to really think seriously about ways you can protect yourself and split your assets up into multiple locations. So in case they come, you have to divulge one, you have many others at other locations. So I'm not talking about storing the same wallet address, but actually having separate wallets in separate locations. The whole key behind a home invasion is that you have your keys, your ledger pin, it's right there. All you have to do is force the person to turn it on and they can seize it from you. So if you can maybe put those things somewhere else, oftentimes you don't need to have right access to your ledger. If you have the address in your Kraken or Coinbase account, you can just always send things directly to those ledger wallets. So a big weakness here is for people to know where you live. If you can give people addresses to like a virtual mailbox instead of your house or mailing address, that might be one way to start to create abstraction. But the time is coming when, say, Bitcoin is $1 million or Ethereum is going for $30,000. You don't really want people to know that you have any of that associated with you, because in desperate times, people will come after you. So the first key is to protect yourself is to be anonymous. Start to hide your address. Don't wear crypto insigniaed clothing anywhere, and really start being low key. Be very careful about even talking about cryptocurrencies in public or to strangers, and maybe to feign that you don't know anything about it unless you feel safe around the company. Another thing to do would be to start to have multiple physical wallets or cold wallets that you save in locations that are very different from each other. When we think about taxes, is there a way to get some sort of compensation or consideration for the loss that you experience? And the answer is yes. And I give you this advice because there's a lot of confusion out there. The 2017 Tax Cut and Jobs Act legislation actually made it so that you could no longer claim loss on your tax return, any personal losses. However, according to Section 165C2 of the tax code, a loss of your investment assets is not considered a personal loss, although it is kind of personal to you. It's actually technically an investment loss. That section 165 talks about losses, and Section C, subparagraph 1, talks about business losses. Paragraph 2 is investment losses, and 3 is personal losses. An investment loss is defined as an activity that's engaged in for profit. Okay? If you had claimed a loss on a tax return, I'm talking about a theft loss of some sort where you generally lost the coins or they were stolen from you. The key thing here, you can claim that. You claim it on Form 4684. You can write those off as a type of itemized deduction, if you will, on Form 4684, where you report business losses. If you get a refund, the excess has a zero cost basis because you've kind of like already claimed it a loss, so you have to treat it as a loss, as having a zero cost basis. However, it should be noted that with all these losses, all you can recover is your basis, what you put into the investment, not the fair market value of the investment at the time that the loss occurred, which oftentimes is what you want. And particularly with Ponzi losses, you may have had false returns had been posted, and you want to be able to claim those returns, but those returns are false to begin with, and the IRS is not going to give you credit for it. They will give you credit for your cost basis. So that's something to be mindful of in any investment activity you do. You want to track your cost basis and be careful how much you set aside. It's always good to pull stuff out as you make money rather than letting it run. So you should always claim your losses. I should note that if it's a significant loss, the IRS may push into it and send you a letter 3176, which would be saying that they think your claim is frivolous and you need to send in some evidence. Any loss you have, you should register it with the FBI cybercrime unit. That's the first thing you should do, maybe with local police if it's appropriate, though none of this is going to bring those coins back. But these are the things you do if you had a real genuine loss and you would need to have to prove that to the IRS. I think this is a discussion that all crypto investors need to take full possession of because nobody's going to protect your crypto. You know, not your keys, not your crypto until someone takes your keys and then it's their crypto. So I guess that's the lesson to be learned here.